folks. Welcome again. Hopefully, we get it right this time. Yes, somehow managed to cut the feed on the last video from a minute or two ago. Apologies, but we are back. I think this one's good. Welcome, Monica. Welcome, Gerard. Welcome, everybody. Looking forward to another great week in the markets. If you can hear me loud and clear, let me know by typing in the comment section. And let's get after it. Let us go. All right, so let's see how good or how quick we can go today. Last week was a very interesting week. It played out the way it should once we had corrected a pre-week error of judgment. Didn't cause us to lose any money, thank goodness. Something we missed in analyzing earlier in the week. We corrected that on Tuesday, and then the rest of the week played out almost exactly, pretty much exactly as we said it would. This week, let's see, what do we expect? So, many of you, if you've been doing this with me and Talkware for the last few weeks, you kind of know the cadence we go through when we're analyzing pre-week. I did a whole video on how to prepare for a winning week or month. We are starting a new month and a new week as well. So for the sake of time, I am not going to go through every single piece or explain every single thing I do on my charts. For the registered students, I'm pulling together a mega playlist for you from last year, all the way from last year, November, I think October, of all the videos you need to have gone through to be up to date with where we are right now. That will drop in Telegram tomorrow. So in the interim, or when it drops, you'll be able to go through systematically, step by step, because some of you have talked about the fact that some of the videos seem to be a little bit here, a little bit there. So they're all listed out in sequential order. You can follow through. So with no further ado, let's get down to it. So of course, number one, we will go to the dollar index. Yeah, somebody says yay. I understand your your yay. Right, so quick second. I was messing around with my MT4 earlier today, literally deleting and reinstalling it. So this is pretty much a brand new terminal. I just got to set it up real quick. But for those of you who don't know how to do it, just be a good practice for you to see how I do it. You go to the market watch section. If you click on it, let's go here. If you right click in there, this is how when you open your terminal for the first time, this is how it will appear. Just a couple of things there. If you right click in that white space and click on show all, it'll bring up every single possible asset class that your broker will let you trade. So there's all the ones that my broker will let me trade. So it's going to go here. Indices, US dollar index. And I'm going to put in my template. Let's start with this, just the plain one. I got a couple of indicators to drop for you guys on Telegram. So stay pinned this week, coming week, as we progress through the program. You will get a couple of indicators that you see on my chart. I want to give them to you when you know what to do with them, not in advance. So now usually I don't bother looking at the monthly chart. That's just usually. Okay, some of us have discussed it, some haven't, but we will look at that in the beginners forum this week, Gerard, with the newbies. So looking forward to that. Right, so I'm going to look at a monthly chart for the first time in weeks with you guys because I want to show you something. If you saw this and I didn't show you, if I could hide the monthly at the top there, and I told you this was a 4-hour chart or an hourly chart, you would believe me, wouldn't you? Because price is fractal, like we say. Fractal means whatever division or level you divide it down to, from monthly all the way down to a tick chart, it follows the same principles. Meaning price action behaves the same way on a higher time frame as on a lower time frame. The difference is the market makers, the commercial banks, the central banks, the mega hedge funds, these are all position traders, and so they are trading off higher time frame charts. So they are making their decisions of the monthly, the weekly, and the daily. And then how price is delivered from the monthly, weekly, and daily is what we see play out on a 4 hour, an hour, and a 15-minute and below. Now, the 4 hour chart I call a transition chart in that it is in between these three and these three here. It has some characteristics of a higher time frame and a lot of characteristics of a lower time frame. And so it's a transition chart in that it kind of gives you an intermediate picture of what's going on between them. But let's look at what's happened with the dollar index now. This is very interesting. Bear in mind, on a monthly chart, every single divider is a year. So this is 2020 so far. That's 2019. That's 2018. That's 20, 19, 18, 17, 16, and 15. Now, if you have watched the video, let me see if I can find that video and show it to you. Let's see. There is a video. Let's see. Let's go to our channel. Good to see you, Esther. So there's a playlist called let me see, what's it called now? Is it the beginner mentorship? Let me see. I don't think it's the beginner mentorship one. Oh yes, that's why some of you won't have access to it because it's not public. But if you are a whatchamacallit now, if you are a registered student, you will have access to this playlist here. It's probably one of the most significant ones, especially for those of you who are not beginners. Now there's a session here. We call it market phases and profiles. So we deal with trends, consolidations, and reversals, and then we go into each one of them on a different webinar. We talk about how all three of them work together. I can't recommend, especially for those of you who are registered students, you're paying for this, get access to it. It will literally change your trading life. Now, one of the things we talked about is markets move from consolidation to manipulation to retracement. So from a consolidation to manipulation to an expansion, a retracement, and then a target. We call it the CMERT. Let me write that out. So we call it the CMERT pattern or profile at Israel Keys Wealth. CMERT. Put that in Navy and bump it up. CMERT. And let me write out each of them so you can see clearly. The C stands for, now this is all in videos we've done already, but let's just repeat it real quick. Consolidation. So you start off with a consolidation. In essence, we see consolidations as the beginning of market moves. Whenever the market is moving, the 12 o'clock, the zero, the T0, the reference point is a consolidation. And so when you're looking through your chart on any time frame, you want to be looking for periods of consolidation. On a daily chart, that's the Asia session. On a weekly chart, it's usually a Monday and or Friday. On a monthly chart, it's usually the first week of the month. On the yearly chart, it's the beginning of the year. But sometimes it's in the middle, but there's periods of times where price is consolidating. As a trader, when you see price consolidating, you know something significant is about to happen, and you begin to study. Your eye should go immediately to the point on the chart where the price is consolidating and see what happens from there. Now, we usually expect to see a manipulation. This is not always the case, but 7 times out of 10, price will move out of a consolidation into a manipulation. And then you see an expansion. In essence, the manipulation is the false direction. It's price faking you out, giving you the impression it's going one way when it really means to go the other way. And market makers love to use this to generate liquidity, to engineer liquidity. After the expansion, we see a retracement, which is a temporary return in the direction of the consolidation, a swing retracement leg, and then we hit a target. The target is, in essence, the destination in that first swing that price intends to reach. After that, then we see it begin to move in a trend, meaning it starts making high highs, higher lows, or lower lows, lower highs, until it hits another consolidation, and then it then either continues or reverses. So that's the CMERT pattern, the consolidation, manipulation, expansion, retracement, target. And it happens on all time frames. Every single time frame this happens, from a 1 minute time frame up to a monthly time frame. There's some charting software that will let you trade yearly candles. I don't know why you'd want to do that, but yearly candles, you'll see the same thing there. So I want to draw your attention, first of all, to see this on a monthly chart. And this is why you should be looking at higher time frames and not get so caught up in the short term or the lower time frames, because you need to understand where you are in the larger scheme of things. So let me draw your attention here. You may or may not believe this, but this is a consolidation. Now, it's several pips in range because this is a monthly chart. Okay, that's a dollar index. Okay, you can't count pips on a dollar index. That's fine. But that's a consolidation. Now, if you drop down to a 1 hour chart, or let's just use a daily chart, because we're going to have to go way back to find that. We're going to have to go way, way, way back to find that. That's all the way back in 2015. Right? On a daily chart, that looks big. That's fairly big on a daily chart. That spanned, let's see now. That consolidation period spanned 223 trading days. If you take into account the fact that trading days don't count Fridays and Saturdays, we're probably looking at almost a year. And so price was consolidating for the better part of a year. It did break above the consolidation range a little bit, but it always returned to it. So I would call that, I'd say this was pretty much, come on MT4, don't do me like this today. I don't have time for this nonsense. So I'd say that's the high of the range, and this is the low of the range there. Yep, Gerard, you're right. Yearly candles might take decades to have any significant analysis to them. That's why I don't know why anybody wants to trade yearly candles, but to each their own. There's always somebody ready to make software to take money of people. So this is now, while you were here, you would not have understood you were in a consolidation at the time, because it seems like price is bouncing around, but it's keeping in a tight range. And coming out of that range, what happens? We had a manipulation, meaning price was really coming down here, but it went up the wrong way. Why? Because when you hold price in a consolidation, you build liquidity on either side of the consolidation. Write that down. The reason why consolidations are so important is that market makers use them to build liquidity on either side. And so there would have been liquidity here, liquidity here. Breakout traders waiting for a breakout trade on this side and on this side. Also, while people were bouncing in the range, some people, and I don't know why any of them would do that if they understand what they're doing, but they don't have the privilege of the mentorship and the training program you guys do. Coming up and down here, the people who will not be closing their trades at either side, like we taught you to do when you're trading a consolidation, You trade a consolidation by marking out the range, dropping down 2 time frames, and then taking trades from the high to the low and the low to the high, and assuming price will stay in the consolidation till it breaks out and confirms the break on either side. So here, for instance, it breaks out here, but it doesn't confirm the break because it comes back down in. Then it goes that way, but it doesn't confirm the break again because it goes the other way. It confirms the break when a candle closes on the other side of the consolidation. And so there's orders here, and they'll usually go one way to clean out the orders, then come the way they want to go. Here we have a double manipulation. It manipulates this way, then that way, then goes here. You see this on several time frames, on every single time frame. But now on a monthly chart, that's a consolidation. This is another consolidation here in this range there. And if you draw your eyes here, let me put the yearly dividers in. So this is 2020. This last divider here is 2020 so far. January, February, March, April, May, June, July. You will see that there has been a consolidation forming for a while there. And that here, let me draw this line here. That's the middle of the consolidation. There. Let's make this maroon, because we're on a monthly or weekly chart. Let's jazz that up a little bit. That's the middle of the consolidation there. If you agree with me that this is a consolidation, so we've had a consolidation, this would then be the manipulation. This here, this move up there, would be the manipulation based on my hypothesis for now. Why? Also, what does that mean? Well, if that is the manipulation, let's put that M. Again, what we're doing here is we're forming a scenario. Before we start taking signals intra-week or intraday, we want to form a larger time frame scenario to understand what price is doing. So that's a consolidation, or that's a manipulation, sorry. This was the consolidation. Well, if that's the case, that would make this the expansion. In essence, we're currently in an expansion range right now. This pattern I'm showing you, as you become an experienced trader, is going to be your bread and butter. And when you see it, when you finally see it for yourself, what's going on here, you really can't unsee it. Consolidation, manipulation, expansion. The question is, where are we expanding to? Has the expansion finished, or is it still in effect? The truth is, we don't know. You don't know how long an expansion is going to be, or even a manipulation, until it has finished happening. So that's a consolidation, that's a manipulation, that's an expansion. Question is, where's the expansion going? At this point, we have taken out, that's a monthly low, but the most significant one in my opinion is this one. We've taken out that monthly low there. There would have been liquidity here. What's providing the liquidity? Several things. First of all, there is a manipulation block down there, which currently you could argue is what's holding it up. Also, there is another block down there as well. And if you want to really refine it, well, there's the smaller one there. So I am expecting at some point, now this last month was a monster. Boom, there we go. This was the COVID month. This was the month where COVID really hit, and so price weak both ways. So I feel like the expansion may be going down. Well, you might be right. Truth is, we don't know. We won't know for sure until it has finished happening. And like I've taught you, we do not guess. We just wait for price and then we respond to it. Right. So if that's the expansion, we taught you to look for a return of price to somewhere from the start to the middle of the consolidation period. If that's the case, then we are likely, I don't know what's going on with MT4 today. It's trying to get replaced by TradingView, at least for teaching. I'll still always trade with MT4, but it's annoying me in the easy, which lets me teach. So that would be the potential retracement. Again, this is all hypothetical. We don't know for a fact. But somewhere in these, I expect one of these two zones to send it back up for retracement. And then if again, we don't know, we could then see this as a target. Now, with what's going on in the States, especially with their botched response to COVID-19, I'm not going to get into that. This isn't a political forum. But whether or not, whatever political leaning you have, you can't argue about the fact that the United States of America haven't gotten their response to COVID right. For whatever reason, whoever is to blame, the economy is teetering because of it. Because if there's a pandemic that's causing a lockdown, the economy is going to suffer. So it would stand to reason that the dollar is going down. Also, so let me see. Let me move these away. Consolidation. Manipulation. Expansion. Retracement. And then target. Cool. So we could then, again, this is all speculative, and this could take between 1 and 2 years to happen, if at all. It could take several years, because as you can see, we spent 1, 2, 3, 4, 5, 6 years just up here. So don't expect this to happen in the next week or two. I'm just showing you a big picture so you understand what might be happening on the lower time frame. Also, if you took a Fibonacci from that high, let's assume you priced in the low there. Let's assume this was the low there. If it came back up, let's see. Let's take it to a point where this would be a 61.8. So let's say it came, actually, now that's a bit too much for me. So let's just make it a 50. So let's assume that was the 50 there. It came there. Well, this would not line up nicely as the 1618 extension. But that's all hypothetical. The point I'm trying to make is this. This next month should either be a further drop down into this region or just the beginning of the retracement back up there. And then we perhaps see a much larger drop. That, now, if we are working with that as a scenario, well, we drop down to a weekly chart. We drop down to a weekly chart. This is what we've just seen. This past week has cleaned out that level. And we already said going into 2 weeks ago that we were expecting that to happen, right? That there would be liquidity in that region there. Now, where's the liquidity coming from? Well, there's a couple of liquidity profiles on offer here, but this one here looks very juicy to me. Now, there's a reaction. Could we be seeing the beginning of that retracement? I don't know. I'm just saying it's something we should consider, right? Something we have to consider. Or are we due to come down all the way here? And if we come down all the way here, we could be looking at this zone there. So again, for weekly chart, every divider is a year, right? So the whole of last year, the dollar index stayed in this range, 48 points. It stayed in a range of 48 points for a whole year. From here down to here is about almost 48 points. This could take an entire 12-month period, or it could take 1 or 2 months. This year so far, we've seen a movement of almost 3 times last year's range. Again, remember, like I said, when you see a consolidation, you should be thinking something significant is happening. And this year so far has been the significant move. So if we jump down to a daily chart, I'm going to just so we can see this clearly. We come down to a daily chart. This is a classical engulfing pattern here. I want to show it to you. Just ignore the line. Let's see. Let me get rid of that purple line. Actually, I'm going to leave that purple line. That purple line here is this monthly low. Let's look at that there, right? That is that monthly low that was stop or liquidity hunted. Come on, MetaTrader. Right, so that's the monthly low there. As you can see, that month low, that's why we tell you to draw out the open highs, lows, and closes of monthly and weekly candles. That month's low forms the body, the close of that candle. Price goes through it, but retraces, so it respects it almost to the pip. Let's see. That candle's low is 9337. So as you can see on the screen where it says time, open, high, low, close, 9337. This candle's close is 9339. So basically 0.2 points in between them. If you drop down to a daily, you see at that same level there, this candle, look at this. Tucker showed you guys this last week, key levels. That was the low of that day. Price cleaned out the stops beneath the low of that day and then reversed and closed above the open of the day. Now, it didn't get to the high. I would have loved for it to have gotten to the high. It didn't reach the high. So it's not as conclusive as I would like. There's still some doubt. Let's put that in green because that's a daily candle. But put that in green as well. Right. So the question now is this an engulfing? Are we now looking to see this? There's no guarantee we are, but it's a factor. It's something we have to at least consider. Yep, you're right. It is potentially, Gerard, indicating a bullish engulfing. In which case, we should consider something of this nature. And to be precise, the next the next order block in its way is that one there. So maybe we see, emphasis on maybe, or run up into that level. Monday and Tuesday will tell me a lot about this. This is one of those weeks where I really want to see what Monday does. All right, I really want to see what Monday does this week. Now, bear in mind, we've used the monthly premise to frame this thought if it does play out. If it doesn't, that's fine. We'll just wait if it doesn't happen. But that's, so we could potentially see that, right? Now, also, if you draw a Fibonacci from this high here to that low there, let's get rid of the divider. That there is a perfect 61.8. You can see that that's a perfect 61.8 from that high to that low there. Now you saw how once price started moving down on the daily chart, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24. 24 trading days is more than a trading month. A trading month is 20 trading days. With the exception of a couple of attempted reversals, this here is the only day that actually took out the previous day's high. Every other day, even the bullish days were still on the trend down. If we saw a 24-day downward trend, what's to say we can't see a 6, a 7, a 10-day upward trend back into that area? So I'm watching Monday very closely. But this to me is a statement of intent. If that's, and of course, we remember that we're framing that off the fact that at some point soon, we're expecting, when I say soon, I mean soon on a monthly chart, which could be a year, a whole year, expecting some sort of reversal before we see a run to a target based on this consolidation, manipulation, expansion, retracement target. Right, let's drop down to 4-hour chart. So, one second. Just remember what these are. That's the high of this candle there. This is the low of the candle. In essence, at this point, it looks like that is going to be the candle that was engulfed. The candle that was engulfed, you want to mark out its high and low. If you drop down the 4-hour chart, those are the levels there. Now, I'm going to get rid of this to make the chart clean. And this is the level that we're potentially looking for price to come back to as a minimum retracement. Let's change this color here. That's a monthly level. That was a monthly low. So I need to remember, keep this in mind. This level here was a monthly low from August, September 2018 that was swept here, right? That sweep caused, in essence, this was the day. This was the end of a day. The next day, price jumps beneath that level. See, there's a jump there, an eagerness to go down there. It then reverses it to the upside. It hasn't yet crossed this level. Why is that important? Because if we were to do the 1, 2, 3, 4, 5, that would be the 4-hour low that was swept there. And if that's the low that was swept, this is the high that would have run down into the low. So I'm going to change this. In fact, I'm just going to leave it as green and draw a purple one on it, because it is both green and purple for the purposes of our analysis here. So I'm going to leave the green by the purple just there so we can see that that is both a daily level and a 4-hour level. That's the low there. If we see price rally above it here, right? Then it's live. I want to see price get here on Monday. I don't want it to open up in 50. It's going to open up in 15 minutes. As you see here, price opens up at at 10 p.m. London time, because that's when my server opens. My broker server opens. So I want to see. This is what I would like to see. And I'm glad this gives me an opportunity to show you this on an example of why you need higher time frame references. I would like to see that, and then a return somewhere in here, anywhere between here and here. If I even all the way down here is valid, but somewhere in there, right? And then a push. That's what I would like to see. You don't always get what you want, but that would make my week very simple. If that happens, then it's chalk, you know. Alternatively, this could just be a false rally, and all it really wants to do, let me show you this, is use this as a stop hunt so it can continue its descent below. How will we know? We will be looking to see what happens on the daily. That's how we'll know. If we get a conclusive daily bullish candle on Monday or Tuesday, Monday could be one of those. Monday could be something like this. This is one of those days where you could see a Monday that looks like this. Monday could be an indecision candle, bullish or bearish, something like that, like a spinning top or a doji or a, I don't know now, something that doesn't give you clear direction. But if Tuesday is a nice push up, then I would say that this level is almost guaranteed to be reached. In which case, sometime Tuesday afternoon to Thursday, Friday morning, I'd just be bullish all the way on the way up. However, if we get up here and in this area then see a bearish daily candle that drives us back beneath that level, nice clear direct bearish daily candle, then we know that this was a stop raid, in which case they've got a lot further to go. They could be coming all the way down to this zone before the monthly retracement. Okay, that I hear you say that sounds beautiful and wonderful. What does that mean in the individual pairs? I'm glad you asked. So just ignore that. I'm glad you asked. So, of course, whatever the dollar's doing, any pair in which the dollar is the second currency will be doing the opposite. So in the AU, for instance, it'll be doing the opposite. Now in AU, I was messing around with something before earlier today. This is what's happened here. This here, let me show you this. Right, let's put these two charts side by side. Because this month, I'm going to add AU to my watch list and take Swissy off. So this month, I'm not trading the Swissy anymore. I'm keeping the GU and the EU on my trade list, on my watch list. And I'm replacing the Swissy with the Australian dollar, US dollar. I'll explain why potentially on Tuesday, in my afternoon webinar on Tuesday. Right, so if you look at this, let's see. You see that high there marks that one there. Right? That spike there, this one. And then as the dollar began to drop, this began to rise. This is a zone of liquidity. So you can see they're mirror images of one another. I like to trade pairs. When I'm trading majors, I like to trade pairs that are tracking with the dollar on at least the monthly and the weekly. And I would like to see them track on the daily as well. In essence, what the dollar is doing is reflecting significantly in that pair's movement. It gives me what I call a reference index, something I can cross-check my trade idea against. In essence, if it's moving with the dollar, when I see a signal, I want to see a similar signal or an opposite signal for a pair like this in the dollar. If the pair gives me a signal, and the dollar doesn't give me the commensurate signal, I don't take it. And that's why I'm dropping the Swissy this month, because I like what the AU is doing versus the dollar a lot more than I like what the UCHF is doing. And I don't want to have any more than 3 currencies on my watch list. So I'm keeping GU, I'm keeping EU, I'm replacing Swissy with the Aussie. And so we've come here. Now we've come here, right? And around a similar time as I would be expecting a reaction on the dollar, I've seen a reaction on the Aussie on a monthly level. Also, it's taken out that intermediate liquidity there. That high there is intermediate liquidity, and it's taking it out. If I drop down to weekly chart, that's what I see on the weekly chart there. So that's the zone. Let's refine it a little bit. That's the zone. It's the order block, the weekly order block. Now, this is not conclusive proof of a reversal, right? It's not conclusive. It's not, the reaction wasn't that conclusive, but it's looking good. So this week, all right, intermediate liquidity. Let me answer that real quick. I think I've shown this before, but let me see if I can find an example here. Right. So from here to here, this swing of price from here to here, right? So that's a high to a low. Let's do it real quick. That's a high to a low, right? On the way back up, actually, this is a bad example. This is a very bad example. Let me find a good one. Let me find a good one. Let me find a better one. Let me find a good one. Okay, perfect. You're going to see far less examples on a weekly chart, obviously, but if you look at this high to this, so this here, this swing here, right? Price starts from here, makes a high there. It makes a retracement. Oh, I've got multiple fibs up. Okay, no, I haven't, no. It makes a retracement here and then starts to move away. An uninitiated trader will expect that to then push up higher. So it's made a 61.8% retracement. We'd expect it to then move to a 1618 target. But I've told you guys this before. Market makers love intermediate liquidity. You see that low that forms there? This is a manipulation to get people to put orders there. Either a stop loss there for somebody on the way up, or an entry order for a breakout trade to the south. there is going to be liquidity here. There's going to be liquidity in that area there, right? And so you see a market maker come back and take out that liquidity level there and come back to the origin point, which would be all the way there. See, this is where the move began, right? This was the low. This is where the move began. They put in intermediate liquidity here by a manipulation. When they began to move up from here, they would have engineered people. People would have put their stop loss there, thinking we're now moving up. Or people who are expecting price to come all the way down would have put their entry order there and say, when it passes that point, I'm in. The guy who's buying, his stop loss would be a sell. The guy who's breaking out trading here would also have sold there. They want to buy. They need someone to sell to them. So this low here causes sell orders to be engineered. Again, the guy who guesses the right direction but is too early, that's why I say always wait for a discount if you're buying or a premium if you're selling. Because if you get in at the fair value range around the 50, it's half the time usually intermediate liquidity. The guy who's buying here, his stop loss is a sell. The guy who thinks it's going to go short is also putting in a sell. Those sell orders provide the liquidity that the market maker needs for their $100 billion buy order. And their price then moves to the right target. This here is intermediate liquidity. Does that make sense? This low here becomes the intermediate liquidity. And so when I am trading, whatever time frame I'm trading on, I like to see intermediate liquidity be violated. If I put in my Fibonacci and I'm expecting a discount entry, anything from 38.2 downwards, when I see this reaction, I want to check. See that this is the first intermediate liquidity. This is the second intermediate liquidity. I want to see somebody punished to give me more peace of mind that I am not going to be punished. I want to see someone crying. This is where I like to explain it. The market maker has one bullet in their gun. I want to see them shoot someone else first. It makes it less likely that they have a bullet to shoot me too. I know it sounds mean. It's just the way it works. And so I usually will not take an entry until I have seen intermediate liquidity. And that's what happens there. I hope that answers your question. So back to our analysis. This here, in this case, for a sell, if that's the high and that's the low, right? If we are coming down, if we believe that this is going to react and come down, well, someone here has had their intermediate liquidity violated. That gives me a whole lot more confidence. It's not guaranteed. It's just an added layer of confidence. So I am wanting to see a reaction this week to prove to me that this is going that way. I want to see a week that engulfs the previous week. We drop it down. I want to see price close this week that looks something like this. That's a bearish candle. Let's put that in red. Let's put it in black. Let's put it in black. So I want to see that kind of candle this week. And then that will give me some assurance that that's about to drop. Until that happens, I am going to assume the price is going to push in further into this order block. Why? We have not reached the center, the 50% mark. We've not yet gotten halfway off the order block. So until we get halfway off the order block, Until I see that, this could just be a manipulation for it to go higher. If it is going to come down, big if, what do we want to see intra-week? Well, let's drop down to a daily chart. Let's get rid of that. Now again, let me take that away for a second. So you can see here, this candle here has had its high nicked. Let's put that, no, I don't need to see that. Let's put that in green. It's a daily level. It's had its high nicked. But the low, again, hasn't been nicked yet. The body has been well engulfed, but the low hasn't been nicked yet. So ideally, I would like to see price close on Monday or Tuesday beneath that level. If it does, well, let's drop down to a 4-hour chart. If that were to happen, then this would be an interesting situation. That would be a market structure break there. That almost lines up perfectly with that level. That would be a market structure break. So that would be our 1. Again, this would be the high. So similar to what we saw on the dollar. This is why I'm picking AU this month. Like you can see, it's tracking very, very close to what we saw on the dollar. That same level there would also be the market structure break. So I want to see price close here in this level, right? And then do that. Come back in here and then drop. Or just violate that level to go above there and carry on going up. That's also valid. Now, on the 4-hour chart, remember I said to you, I taught you this on Friday. I hadn't taught it before because I didn't want to take it too quick. But when you are planning or when you are gauging your week, remember the beginning of the week on the 4-hour chart is Sunday. Ignore Sunday's trading. It's just, yeah. The real open of the weekly candle is the second candle from the divider. That takes you into Monday Asia. This is how you delineate the beginning of the week. Ignore this and this. These are just, so this is 10 p.m. Sunday into 2 a.m. Sunday. This is 2 a.m. Sunday into 6 a.m. So 2 a.m. Monday, sorry. And this is 2 a.m. Monday into 6 a.m. Into 6 a.m. Monday. So these are Asia. This is London Monday morning. That's where you draw your weekly. In essence, on an up week, you want to find an entry below there. On a down week, an entry above there. Well, if we apply that here, again, for instance, here, on this week here, ignore that, ignore that. This is where London opened on Monday. So for an up week, we wanted to see an entry below there. We get it here. And then it pushes up, it comes back again, and then goes up again. Now, the question is this an up or down week? Well, where are we going to, first of all, where's the week going to open? That's why I'm waiting for Monday. I want to see what Monday's London Open level is. Let's assume it's here. Let's assume it's somewhere here. The question then is up or down. If it's up, well, we want to see price come up here, maybe to this level here, this manipulation block, and then drop. But if it's an up week, then it's going to dip, definitely dip down here and then go up again. So I would keep your eyes peeled for what happens. If Monday will tell us where the open level is, Tuesday will tell us what direction it's going in. I am suspecting that we see this on Monday, then it goes up in there. For instance, this is a pair that moves in Asia. It has an Australian dollar in it, so it will move in Asia. So we might see a big range during this Sunday, Monday period, but watch that level. I'm going to come back to that on Tuesday or Monday night. Watch that level. But if all goes to plan, we could be seeing a significant drop. If that happens, we had 1 month that took us all the way up there. I would say this is if we have a down month, that's the minimum fair game. If it's a down month, we should get down to that level, which gives us almost 400 pips to play with. So we have a potential for a 400 pip month if that order block holds. If not, that's fine. There's plenty of space above it. Then we just adapt. In which case, we just keep taking long entries. Open, high, low, high, close. The next day dips back into the previous and we keep going. So let's see what Monday and Tuesday do. Right, GU. I'm not going to go into the same detail with GU, but it's similar. It's very similar. That's the wick down. That was last month. Now, excuse me 1 second. I find it hard to believe that this doesn't mean we're in a long-term bullish move. All right, let's go back to dollar index. So, actually, no. Sorry, I just made a mistake on the AU. We're coming down on the dollar, so we should be going up on AU. Sorry, that was wrong. So I just did AU all wrong. Forgive me. I just did AU all completely wrong. Actually, no, I didn't. No, I didn't, because yes, we're coming down here, but we're expecting an intermediate retracement. So it's that intermediate retracement on AU that should be a down. If we're retracing upwards on the dollar, the intermediate retracement on the AU should be down back into this level, and then we push up. So I was right. So coming to GU, well, similar thing. This here is almost as close to a Marubozu on a monthly chart as you'll get. Very low wicks, very high body. A very large body. 680 pips and almost 700 pips just from the open to the close, ignoring the wicks. This momentum move here, this momentum move here makes it very, very likely that now I think price is looking for this level here. Long term, over the next few months, I think price is definitely looking for that level there. Definitely looking for that level there. And as you can see, by the time it gets there, it will have taken out this intermediate liquidity here. To get there, it has to take out this intermediate liquidity. Let's put that in maroon. However, There's no way this is not coming. I would be very, very surprised if we don't see at least the beginning of the month a retracement back into that level there. That was too large and clean, right? I am going to put some, I wouldn't put my house, but I'd put a wristwatch on the fact that I want to see, I ideally want to see this. For instance, if you take this here, right? If you take the entire month's range as Fibonacci, just the high to the low of the month, right? If you take that as a Fibonacci level, right? Well, it should put in a discount retracement, shouldn't it? It should come back down roughly to this region. Also, if you look at this candle's high there, right? That's halfway in between there. If you also look at this candle's body, which is almost identical to this one's body, let's use that one. So I am expecting, I might be wrong, but I'm guessing that the first few weeks of this month you see us have a retracement. That would line up with the expectation of a dollar retracement, right? And so, weekly chart, well, there's an origin move here. Price leaves the order block here. It hasn't returned yet. This is my guess for what's going to happen this month. Again, I could be wrong. It could just go all the way. If it goes all the way, that's fine. We're already almost here anyway. So we're already at this level anyway. But as you see, there's been a reaction there already. Does it just rip through it all the way? Does it come back and reprice? My money, or I should say my desire, is on it coming back to reprice. And then pushing through it. So that's, again, that's my hypothesis. The first week of the month will show me. If that is to happen, drop down to daily chart. Well, we saw that Friday was a pretty nice reaction. But again, actually, one second. Let me drop down forward to look at this. So that's the case. That's a high there that was taken out. Yep, and the market structure. So I was right. The market structure for that high in a forward chart is all the way down there. That lines up with that day. It's candle. So until price comes there, we don't have a conclusive sign. But we will be watching. But I'd like to see that. Right? And then a retracement in between. So this here, I'd like to see this. And then this. And then this. That's my preference. Maybe it could stop here because of here actually. So that actually could be what stops it, because if you look at this here, that actually lines up perfectly with the 61.8 retracement level. So you see that order block there lines perfectly. So with 38.2 retracement level. So that could come back down into there. But that's my preference. Again, we will see what happens. Or it could just use this as a manipulation and then carry on going higher. Monday and Tuesday will tell us. So keep your eyes peeled to your charts Monday and Tuesday. For those of you who are on Telegram with me, I'm going to be sending you alerts on how I am interpreting the first 2 days of this week. So by tomorrow afternoon, so evening, I'll send you out an alert to say, okay, this is what Monday's done. This is what I'm thinking. And then Tuesday again, I'll do the same thing. So that's let's put this dividers back in. Now, let's get rid of this real quick. So, all right. Cool. So again, we're going to wait to see where the week opens up. We're here right now, but we're not going to take that as our weekly open. Let's assume this is where Monday's New York opens up. That then gives us a level beneath or above which to look for a buy or a sell for the week. So wherever this line, it could be there, it could be up here, it could be down there. If it is down here, if this is where Monday opens up, that will be fascinating for me, because then we're then going to have a double. Anyway, I don't want to mess with your minds. Sorry, I'm just looking at something that I think is quite interesting. We could see potentially a double manipulation on GU to start the week. All right, guys. So EU. Do I need to show you EU? It's pretty much more of the same. It's pretty much more of the same. There's the same candle there. There's the same low down there. In which case, this one here is reacting. 1 second. That's reacting to that there. So again, while I do believe that long term we are going to see a push up, but if this is a consolidation here and that's a manipulation and this is an expansion, the question is, does the expansion just continue, or has it reached its first area in which we then get a retracement? If we are to get a retracement, we'll be looking at it to come back in here to that level down there, or perhaps this manipulation block here. So one of these two levels is what we'd be looking for retracement for. If the retracement is happening this month, this could carry on for a while before the retracement happens. If that is to be the case, weekly, so again, not conclusive. This is a tweezer. We could see another weekly tweezer, in which case, so price could run up to start the week, back up to that high there, and then drop and form a black bearish body here. Similar, let me look for an example of what I'm talking about. Right, so let me see. See this here, right? This runs up and then is rejected. The next week runs up to roughly the same level, takes it out, and then is rejected further. That could be what we're seeing here. In essence, we could see the start of the week. We could actually see price take out that high there, or come close to it, and then drop, and then take out that low. If that happens, then it's look out below the next few weeks of the month. On a daily chart, again, the same thing that we see on the last 3 pairs on our watch list. It took that one out. Put that in green. It hasn't yet taken this one out. And if you go down to a 4-hour chart, you will see, yep, that if that's the one, this is where the 2 is supposed to be. So again, similar thing, we want to see price close there before we know for a fact. We could see the week start and go all the way back into that region and then drop. Or it could just start, come down here, and then go high, or just drop all the way. Watch Monday, watch Tuesday, but bear in mind what is happening on a higher time frame. So when you start seeing price run around on an hourly chart, you know what it's doing. You know what it's trying to accomplish because you have a picture of what's going on a higher time frame. Folks, I am going to call it a night there. So we've introduced a couple more concepts. That's what every time we do analysis, I try to see what that week or day or month is giving to see how I can throw in a bit more of the concepts we work with. Go watch this video again and then go look at the charts yourself and see if you can create from scratch what you just saw me do. So take a blank chart, watch the video, take a blank chart without referring to my analysis and see if you can reverse engineer what I've shown. Also, if you have other pairs that you're looking at that are not one of the three, so actually let me just put that in here real quick. So this month, what have I just done? No, that should be there. Cool. So this month, put that down there. So August watch list. Put there. Actually, Israel's August watch list. This is my personal watch list for August. Doesn't have to be yours. Israel's August watch list. A second. My keyboard has this funny thing now where it's not putting the colon in for me directly. So I have to go copy it from another document to put it in. I don't know for the life of me why it's not doing that. So Israel's August watch list. Oh boy, I'm sleepy. Number one, Euro USD. Number two, GBP USD. And number three, AUSD. Right. So these are the three pairs I'm personally watching this month. Also, bear in mind that one of the pairs of my watch list has an Asian currency, the Australian dollar. What that means is there will be some overnight moves. So one of the niceties of using GU, EU, and Swissy is that you don't expect to see overnight large moves overnight. You will see some nights that the Aussie dollar will move significantly overnight because it is an Asian pair. So people will be trading overnight. So I'm not gonna, if I'm in an Aussie dollar trade, I'm not going to be too quick to close at the end of the day because I could see significant movement my way overnight. On the flip side, I could see retracements against me overnight. So bear that in mind when we give signals during this week. All right, guys. Any questions before we close? Otherwise, I move the motion that we all go get some sleep. It should be an exciting week in the markets this week. I'm looking forward to it. I am so looking forward to it. All right. I'm told no questions. In the absence of any questions, I will see you guys tomorrow. Talkback is going to be doing a teaching session. Actually, let's for those who don't know how we roll. So this is our weekly schedule. Talkback is going to be with you guys tomorrow at 9:15. What we've kind of done is swapped the Monday and the Sunday for the next few weeks. So I'm going to be doing analysis on a Sunday night. Talkback will do some analysis on Monday and also do some teaching, and then Tuesday night as well he'll do a complete teaching session. So we'll see you at 9:15 tomorrow in the evening, and then 11 a.m. and 9:15 most of the days during the week. If you want access to our full mentorship and training program, this is what you have to look forward to. You get all of that for the stupendous price of £99, £99 a month. It's crazy. We shouldn't be doing it, but we are. You get access to our Telegram groups, pre-recorded content, one-on-one mentorship, signals, and development. You also get access to our closed forum. Not everything we do is on YouTube. There's some videos on YouTube that are private that only registered students get access to. And this month we may scale back on some of the content we put on YouTube because we want to focus this month in really giving hands-on support to our students. So get in now while you can. How do you do that? Well, you send an email to israelkeysgroup@gmail.com. israelkeysgroup@gmail.com. It's at the bottom of your screen. Alternatively, you can send a Telegram or WhatsApp to that number. Preferably Telegram, please, if possible. WhatsApp is crazy. Some days I see almost 200 messages on my WhatsApp, and so we may not get to it, but Telegram is a lot more streamlined, so you can send us a Telegram there. Okay, so we will see you tomorrow at 9:15 p.m. Thank you guys for hanging with me tonight. It's been live. Take care. Bye-bye.